The rand is 1.1% stronger against the US dollar after the release of those numbers showing that South Africa's economy expanded 2.2%, surprising economies. Now, of course, this is an improvement from the numbers that we saw for the first quarter as well as the second quarter. Now, taking the country out of recession was manufacturing, which expanded 7.5%, and agriculture, which grew 6.5%. On the other hand, we had mining contracting 8.6%. Before we engage with my next guest, let's take a listen to some of the voices that were attending the release of those numbers.
I'm very happy that it came out above 2%. That was roughly where most people expected it. I also expected between 2 and 2.5 on an annualized basis. Manufacturing came through, mining was negative, but most of the other sectors improved in line with what we expected. So it's a good number in that sense, in building towards a full year average of around 0.9, maybe 0.8.
And what does this mean for the full year GDP numbers?
Yes, 0.9%, and I know that's pretty dismal, but it's better than what we thought earlier this year when we had bad negative GDP numbers. 0.9% GDP growth for this year. It's down on last year's 1.3, so it's not great, unfortunately. But it's fortunately a start on the positive path from the third quarter onwards.
Do you think these results are positive enough to keep off the ratings agencies?
Strictly, no. But fortunately, it seems like Moody's they're willing to give us the benefit of the doubt to get reforms through during the course of next year. But yeah, growth is the biggest risk in terms of ratings, and we need better growth, more sustainable, higher growth. Some of the things that the President has done in terms of getting South Africa on that growth path has been positive, but we need a lot more to lift confidence, and confidence will be key in driving growth to a more sustainable, higher growth path.
That's Johan Els from Old Mutual talking about those numbers. In the studio with me to dissect and understand what happened is Maarten Ackerman, Chief Economist and Advisory Partner at Citadel. Thank you, Maarten.
Hi, Godfrey.
Were you surprised, like I think almost every other economist, by those numbers?
Yeah, I think it was a bit stronger than what we expected. But I think at this time of the year, probably some good news. You know, we've been in a very tough year.
Yeah.
So this will help a lot in terms of just rebuilding some confidence.
Yeah.
And hopefully getting to the numbers that's currently on the table for 2018, although the challenges remain.
Absolutely. And in terms of those surprises, where did you find the most surprise? Because I saw that number for manufacturing, 7.5%, agriculture, not such a big surprise, 6.5%, but mining obviously taking out from the growth.
I think the high frequency data, we knew that mining is going to be under severe pressure.
Yeah.
And also on the same side, we knew that manufacturing is going to do quite well. So yesterday, the PMI confirmed that the manufacturing sector is looking much better.
Yeah.
So it's good to see that, you know, manufacturing and agriculture, two major job creation sectors, to see that they're actually picking up and rebounding, because to create more inclusive growth, that's where we need to see growth and creating more jobs and opportunities.
Yeah.
So I think that was a surprise across the board, strong sectors in general.
Yeah.
So a very solid number altogether.
Absolutely. So does that change your number for the year then, and also potentially for 2019?
No, I think we need to remember that the first quarter was still minus 2.7.
Yes.
We revised the second quarter now from minus 0.7 to minus 0.4. Now you add the 2.2, which means that the last quarter of this year really need to be very strong to get to, let's say, 0.9% for 2018.
But let's say Chadema that didn't they?
Yeah, so I think it's still a challenge. So I think if we get anything close to 1% this year, it will be a high number.
Where are you sitting at the moment?
At the moment, we've got a number for 0.8, 0.8 for 2018.
Yeah.
And like I said, I think the risk is probably to the downside.
Rather than to the upside.
Rather than the upside.
Yeah.
I do think, however, that in the final quarter, you know, a lot of things are taking place at the moment. So this stronger number should contribute to better consumer confidence.
Yeah.
We're seeing a petrol price decline, which is quite significant.
Absolutely.
So we might just have a slightly better Christmas.
Yeah.
And that might support the numbers.
A slightly better Christmas than we expected, hopefully a better GDP number than we expect. I saw the other day a story done on Bloomberg, I have to mention, talking about the fact that out of those countries that profit from a weaker oil price, South Africa is along those that are right at the top. So hopefully that rebound is going to be stronger. Before we talk about next year, let's talk a little bit about the importance of this number for the rating agencies.
Yeah, I think it's very important. You know, the rating agencies said that they're focusing now more on growth, because that's a missing link. So we can keep on focusing on the deficit, we can keep on focusing on debt to GDP, but the bottom line in that equation is if we can get growth going,
you'll fix all the other numbers.
Fix all the other numbers.
Yeah.
And with higher growth, higher spending, obviously that will help the tax revenue. and that will address the deficit. So the focus on growth, they've said that already a couple of months ago, and this number is at least pointing in the right direction. The year-on-year growth number is still quite weak. We're sitting on 1.1. Now, I always say that the population is growing at 1.7, so technically we're out of the recession now. We're a positive quarter, but per person we're still in recession.
Poor. Absolutely.
So we need to get that growth number to probably 3% if we're lucky. But then we sit with challenges like Eskom at the moment, which I'm not sure whether they will be able to support an economy that's growing at 3%.
Absolutely. You talk about another important aspect that the government has to look at now. It's fixing the parastatals, isn't it?
Yeah, that's probably right now.
Some free advice for the government. Come on. Please, help us out.
Advice for the government.
President Cyril Ramaphosa, he's trying to do good here.
Yeah,
what should he do?
I think the policy and the plan that's on the table is the right policy and plan.
Okay.
So now it's all about sticking to it and implementing it.
Right.
So as long as we can do that, we will see more of these kind of quarters that we just saw, and eventually that will help to increase the tax revenue.
Yeah.
In terms of the parastatals, you know, they're sitting with a lot of issues. So it's not just replacing the boards, which we did.
Yeah.
It is basically turning them around into a more profitable organization.
Yeah.
But the legacy in terms of debt, that's something that will take a bit of time.
Does the government take it over? Is that a solution, do you think?
Well, I think the government is already mentioning that they're looking for private partnerships.
Yeah, but they won't get anyone for SAA, unless if you tell me otherwise. I mean, I don't know anything about
I fully agree with you. You know, if you look at SAA, a lot of the routes are very profitable, but you're sitting with the amount of debt. So it's almost like trying to restructure the debt and get a way to actually manage the debt going forward, but also turning the company immediately into profitability so that there's no further corruption or unnecessary misspending.
Okay, let's look into next year.
Next year, I think if we stay on this course...
Unfortunately, we have to have an election.
Or fortunately, maybe the election will help us with a lot of removing a lot of uncertainty. So I think up until the election, we're probably still going to be in this wait and see.
Right.
Where whether it's local or foreign investors are saying, well, we're looking for two answers. We're looking about clarity on the land issue and also what the outcome is going to be of the election. I think as soon as the election is out of the way, whatever the outcome is going to be, it will create more certainty in terms of that's what we're dealing with. And then we can actually progress with a lot of the policy implementation. That aside, I think that next year should be a better year compared to this year. We are leaving some of the legacy behind. So we're looking for probably a 1.5% going into next year.
Right.
The consumer, again, if you go back to today's numbers, you know, we were very concerned that the consumer are on their knees. That increase.
I'm on my knees.
A lot of petrol spraying, maybe. Petrol price increases. But now, you know, the number today is showing 1.6%. So it shows that the consumers are still there and thereabout. And I've already mentioned, I think, quite a significant decrease in the petrol price should support them going into next year.
What you haven't talked about, Maarten, is the other numbers that the president has been able to conjure up. He got those investment summits. They poured in according to those numbers. I don't know over what sort of time frames we're talking about. We're talking in excess of $30 billion that's going to be coming into this economy. And I've heard some people calculate that those numbers, if the promises come into reality, we're talking about a percentage point increase in GDP potentially.
No, that's I fully agree with that. So President Ramaphosa realized that we need to focus on investment. That's the only way we're going to uplift the economy. We had the investment summit. In fact, when he came in the beginning of this year, he said he wants $100 billion over 5 years. He's been in power now for 8-9 months. We're sitting at $50 billion committed. Now, I fully agree with you there that the money's committed. We haven't seen it flowing yet into the economy. Again, my view is it will probably happen over time, but also they're waiting to see what's going to happen with the election outcome. If it happens, on the same page you say that's really going to boost the economy. It's likely to support the currency as well, and we should see 1.5% more growth as a result of those fixed investments coming online.